Good morning, folks, and welcome to the next webinar of TiE, and this is co-hosted by TiE-numberz. This is apparently a very, very interesting topic. We are going to be talking about how one needs to protect their working capital, especially during this time. I have my charter member and a superb team of co-founders of Aditya and Rajiv over here, who will be basically hosting the session. And to give you a little brief, TiE-numberz is a SaaS fintech company. They help basically decrease late payments and bad debts. They help improving team efficiency, and they also kind of help you build deeper customer base. Well, the event is not about them. The event is about basically how these co-founders are bringing a panel together and bringing out the expertise of this panel to help you guys through these moments. So I'm handing it over to Aditya right now, and Aditya will kind of host the show for us today. And feel free to kind of post your questions on the chat, and Aditya will kind of navigate it through as and when he feels it's necessary. In case Aditya has some internet problem, his co-founder Raji will step in, and we'll kind of manage the flow that way. Don't worry, folks. Over to you, Aditya, and I'm going off now.
Sure. Thanks so much, Naveen, for the warm introduction. Well, I already see we have nearly 70 odd people who've already joined in on a Saturday when the lockdown has already started easing out. So, I don't know whether the topic is really interesting for everyone or it's just that people are still not trying to venture outside. But extremely encouraging to see more than 70 people really participate for this session. So, first of all, good afternoon, everyone. It's an absolute pleasure to host you. Okay, along with TiE, this is the series of webinars that we hosted, and the ones that we hosted before. The first was, of course, on the global best practices on what companies can do in order to better manage their working capital, especially around receivables. The second one, which we did 2 weeks back, was around how technology platforms are helping businesses manage through these times, and we had people from SAP, NTT Data, and Medtronic come and speak about their experiences. And this one is actually based on the feedback we got from a lot of the participants is, can we share how new age financial services and technologies can help us during these times? With that, we have got together an esteemed panel. So without further ado, let me get them on stage. First, we have Ms. Deepa Kaushal. She is the Cash Management and Innovation Head at Citibank, India. Someone who's really been at it for years, helping businesses across the region, better manage their working capital and collections, both with a host of innovative financial technologies as well as services. Thanks, Disha, for joining us on a Saturday. I know it must be a very busy time for you on a weekend. So thank you once again. Welcome. Second up, we have Varun Mittal. Varun is a global emerging markets fintech Ernst & Young, Singapore. He's someone who's working very closely with banks and fintechs and trying to solve customer pain points. And he's really been involved very actively the last couple of months, trying to figure out how businesses can leverage fintechs during this time. So Varun, thanks a lot. We really look forward to your experience and your sharing. Thank you for finding time on a Saturday. Next up, we have Mukund Daga. Mukund is VP Credit Solutions at Anviti Insurance. He has a deep experience in credit insurance, Tata AIG and a host of other companies. He's someone who wants to come in and tell you all what his customers have gone through in terms of leveraging insurance during, and also how you can, as businesses, think about insurance as we move forward. Thanks, Mukund, for finding time. Next up is Vijay. Vijay is a CFO at Capillary Technologies. Capillary, as you all know, is a leading SaaS platform, which is serving customers across the region in India, South Asia, Middle East, and many other countries. He's someone who's leveraged financial services and technology immensely in making sure that they have a healthy cash flow. Vijay, thank you for joining in. We look forward to your insights and the best practices that you follow in your company. And last up is Rajiv. Rajiv is MD CEO Bignify. He's been the ex-COO at Carnation, CEO at Philips ID. Someone who's worked across multiple industries and set up multiple businesses, which distributors and dealers. So Rajiv is someone who's been advising large companies currently in how to think about their capital management during these times across the dealer distributor network. Rajiv, thank you. We really look forward to what you've done in your previous lives and how you're helping your corporates right. So thank you for finding time. So with that, panelists, thank you so much for coming over. Audience, we are going to have largely 4 sections. The first 3 sections, we will ask specific questions to panelists, and then they will share their point of view with all of us. The 4th section is completely audience. So we will look at the questions that you've posted for us and the audiences, and time permitting, we'll take as many questions as we can and get the panelists to answer that. So, while doing that, we also have some polls that will be posted on the platform. Please look at them and ensure that we share perspectives. Okay, and we will share them time during the sessions and see what you all have to say about it. So with that, panelists will jump section straight away. The first section is largely we will ask all of you, okay, which is around when it comes to receivable collections, what's the Indian and global outlook and how enterprises. Each of you will have around a minute and a half, and we want to have 1 key insights from you as to what is in your immediate ecosystem. I'll actually start with Deeksha. Deeksha, because someone who's data across the globe, and a lot of your customers are having their cash flow go through it. So, want to start with you. If you can share your perspective, how the receivables and collections are panning out during this time. Over to you, Deeksha.
Thanks, Aditya. I think as we've all seen in the past few months, this virus knows no borders. Impacted countries, whether they're emerging or developed or underdeveloped. And what we're seeing in terms of impact to supply chains are that there are really big shifts that are happening in terms of supply chains. In some cases, it's a distortion. In some cases, it could even be a destruction of the supply chain. And when we think in terms of what the outlook would be, there are 2 axes on which really depends. The first is in terms of what is happening to the country itself. So, for example, countries in Asia like China, Hong Kong, Taiwan, Korea started earlier on this pandemic and now are almost getting back to normal in terms of the lockdowns getting lifted and work getting restarted. The other axis is the industry. So some industries like travel, hospitality, luxury goods are deeply affected, but others like telecom, technology, remote working environments, data, they are actually doing fairly okay. And e-commerce, of course, seeing very widespread growth in a lot of global markets, and we think India will also follow suit. So in terms of what companies are doing, to counter this and to tide over this time, I think one universal truth that we've seen across countries, across companies, big or small, is that cash is king right now. So most companies are focused on conserving cash. And what that means in terms of therefore receivables is that they're getting very sharp in terms of how can they manage their receivables better, get more digitization around it, offer better access, to their end customers. And this is no longer something which is only with the treasury and finance function. We're also seeing this become so strategic that CEOs have in some cases war rooms, or a larger organization is working through in terms of how do we.
Got it. Well, thanks, that's very insightful. Quickly, Varun, can you share your insight, please?
One of the biggest challenges which has happened in the light of the whole crisis has been people could not have their business processes spaced up in, and they have used their infrastructure to solve the problems which they were not solving before. Specifically, for example, cash collections. So a lot of these places, they were doing cash collections but for doing wallet top-ups, and now they're using the same infrastructure for getting the supply chain to move because it's stuck in some of these emerging markets. In some scenarios, they're actually working with the banks, and the bank normally was just opening their account, was not only providing the basic transaction services, but now the bank is collaborating with this. Can you collect cash on my behalf in the last mile? Because I don't have branches, all of these places, you can collect money and pull money from these convenience stores. A lot of payouts, and if you've seen in US also, US Fed actually is now shipping debit cards, because if if they push those checks, there is no branch to deposit that check in some of the counties. So they are pushing. Europe, Oak North, and all of these non-traditional banks were given the mandate by the government to distribute that money. So from the collections as well as dispersals, the fintechs have stepped up saying we have infrastructure which is additional, and we also have last mile connectivity to complement what banks are doing. So it's not a competition, but here are all these additional infra we have, and it's sitting idle because we don't have any transactions. Nobody's doing a lot of those transactions, so it might as well just use this. So what we have seen is suddenly these people have a new pool of customers. Singapore, one fintech has done that. If you are our user, you can go and get a free mask. So now suddenly 65-year-old people are learning how to use QR because you just scan your wallet on that machine and it gives you a free mask. So it's also boosting capability around those, and specifically for these end edge use cases, it is changing the way we were looking at, okay, these are complements. Now suddenly their infra, the power of fintechs to offer additional infra has changed the way everybody looks at them.
No, makes sense. Thanks, Varun. Mukund, over to you quickly.
Guys, basically the entire supply chain has already got disrupted. We have been seeing that because of the COVID situation, the collections are not exactly happening up. This has resulted as actually overdues into almost each and every company, if you look at particularly, except the essential part, which is also facing overdue. The non-essential is completely like rogered in a bad way. Things are pretty bad. If you look at any receivables per se, it compromises around 40 to 50% of the balance sheet. So eventually, if we look at companies, they normally go for only protecting by taking mandatory insurances, which has been again forced upon them by the financial institution, like land, building capital, inventories, all those stuff. But still, a major part of the balance sheet is not being protected. I believe this product can be used to the receivables, and in a situation like this, definitely it makes more sense.
Got it. Cool. Thank you, Mukund. Vijay.
If I take cash as an indicator of confidence in the businesses that is there, we are seeing that I think India is certainly in a much better situation that we saw in April and much better situation that we saw in first half of May. There's a bit more confidence in the market. I wouldn't say it's come back, but there is a bit more positivity in the market. Middle East, Middle East opened up. Places like UAE opened up, Saudi Arabia opened up because of Ramadan. However, we still don't see that much confidence in that market out over there. And there is still a lot of fear that post Eid, the markets might again go into lockdown, and they're significantly oil revenue and retail dependent. So there's a bit more negativity overall in the Middle East. Southeast Asia, things are much, I would say, between these India, Middle East, and Southeast Asia. Southeast Asia is in a much stable platform. It's still a lockdown over there, but customers are far more confident than any other market. I think that probably also reflects the confidence that they have in their society and in the government that is there. So kind of overall, when it comes to collections, etc., it's far more better when I speak to the customers out over there. Best of the lot, of course, for us has been China. We have, we saw a pretty bad month in Feb and first half of March. But when they started business, it's been stable. And they've been able to very gradually come back to an almost normal cycle.
Very nice.
I don't know if that can be applied across the world. I mean, that's what we have seen in the last couple of months. But hopefully, the rest of the world can recover back in the same pace.
Got it. Very, very interesting, Vijay. Very interesting perspective. Thanks. Rajiv, over to you.
Hi. So we work with a lot of SME customers and who've been very badly hit by the crisis. So our first brief to them is please reassess your liquidity position, which they anyway have done. And post that, look at your sales pipeline. Most of them have been badly hit by the sales pipeline. And the first thing is, if you're rebuilding your sales pipeline, how can you rebuild it without burning a lot of money? can you create a new business model which doesn't require you to spend as much money and get your business back on track? You obviously need to reassess your entire supply chain. The customer engagement touch points become important, and how can you work in a more virtual means to make sure that revenue starts flowing in. Digitization is something that we're really focusing on. So we're asking our customers and the SME customers, many of them are businesses. How can you become more digital? You will be able to save cash, you'll be able to keep your entire revenue cycle moving as well, including infrastructure. So there was one of our customers, he didn't have adequate, he had more desktops and than laptops for his team. So once the lockdown happened, the business came to a standstill. The internet bandwidth at people's house or the dongles wouldn't have sufficient internet speeds. So if the lockdown again becomes stringent, we are helping them to prepare. How can they keep the business continuity on?
Got it. Very, very. And I'm saying a lot of these guys would be even worse off when they go deeper into their distribution network, which will be even further hit. Got it. So those are very interesting perspectives, team. Thank you so much. Right from what we are seeing in terms of overall collections happening. Okay, how the fintechs and wallets and everything are being used. Okay, to they're rethinking the way the balance sheets are being set up. Okay, and a very interesting perspective on how different markets have responded and coming back, and of course some of the on-ground challenges that companies are seeing. So overall, I think right from a perspective of a lot of innovation, it seems to be happening from the banks and the fintech side, which customers are starting to see, okay, and recovery as well from different markets. So with that, I think I'll quickly get into the next part of the section, okay, wherein we have very specific questions for each of the panelists, okay, and the panelists will have 4 to 5 minutes plus in order to share their perspectives. So Diksha, again, you are the first one again on this front. The question that we had for you, okay, was, what are some of the innovative ways in which banks are trying to come to this rescue? I know you guys, from a financial service perspective, you have quite a bit, but I've heard also done quite technologies, quite a few fintechs to do that. Would love to hear your perspective.
Thanks a lot, Aditya. I think what's really clear in this pandemic is that digitization is here to stay, and that's how banks are also helping the entire supply chain manage through in terms of receivables. So let me talk through the entire cycle in terms of collections, starting from the challenges of how do you get invoices. A lot of us were used to getting invoices physically, and one of the first things, as now banks are providing, sometimes in partnership with fintech, sometimes our own proprietary platforms, are electronic presentment of invoices, digital invoices, capturing of data such that we no longer have to depend on that physical invoice and its travel time, etc. The second part is how do you get various forms of payment? There are various estimates around, but one thing is clear, that physical checks, cash, even to some extent wire payments are significantly down in the country. What is growing though, and what is helpful on the B2B side is ACH or direct debit. On the consumer side, it is platforms like UPI and IMPS. And these are no longer good to have. These have become very important in terms of just running the business. So when we look at these forms of payment, what is important for a company is how soon can we enable it. And we've had experiences where companies have been able to go live in a span of 1 or 2 days. And that's what really provides continuity of business. The third part is in terms of how do you reconcile and look at cash applications so that you can focus your energies on names where you've still not got the money. And again, it used to be a fairly manual process, just because we never had the need, frankly, to get it digitized. And that's where a lot of fintech partnerships, AI-led platforms are helping in terms of a near automated way of reconciling what are the various cash applications that have happened, and they match off credits in a bank statement with any form of advice that the client has got. So at no incremental work basically to the client. So I would say, therefore, in summary, what is happening on the entire collections chain is that it is getting fully digitized. Second thing is that, there's a focus in terms of what will be least amount of effort for the company to help them realize, and reconcile the collections. And the third, and in these times, it has become critically important. One is resiliency. So the bank's own resiliency of getting all of these services through to their clients when they themselves and their ops and technology teams are work from home. And we've seen that, that continuity of service and resiliency from the bank is something that right now clients and corporates are very keen to get. So long as you're able to provide all of these three with, existing digital platforms, we're seeing massive adoption. So whether it is, on APIs, whether it is on, these digital collection solutions, and I think that's going to stay.
Got it. Thanks. Diksha, I know I was part of one of your webinars that you guys did at Citibank, and I was seeing the host of offerings that you guys have. And if I just have to summarize all of it, I'll take at least 10 minutes. So it's very exciting to see the work that you guys have done, and more exciting to say that a bank like a Citibank, which always used to say Citi never sleeps, it truly hasn't slept. and yet we have a webinar on Saturday also to make sure that you don't get any rest. So to all my audience, I would really encourage you to reach out to folks like Citibank. I think they've had some very interesting offerings that they've given to their customers, and especially if companies like Capillary, which have global operations, you all should definitely see the stuff that they have. It's very innovative. Now talking about innovation, I cannot not think about how the startups have been helped. One way, Diksha did mention that in banks like Citibank, have been partnered with startups to do that. No one else better than Varun to start speaking of his perspectives, because he works very closely with that ecosystem, both in India and South Asia. So Varun, you next. How have you seen some very concrete examples of startups that you've seen, either in terms of payments, risk, or collections that you can share about?
I'll give you a real example of a company I was looking recently. So insurance agents normally receive their commissions. So whatever they have sold, they receive a commission every month for the stuff they have sold in past few years. And right now, because they can't sell anything new in last 2-3 months, or they can sell much lesser, and they are in need of cash. So this fintech, what they have done is they are doing an invoice discounting model on the premiums which the insurance company has to pay them over next several months. And they are betting on the fact that an Aviva or an AXA or an Allianz will not go under. The probability of they going, if they go under, then a lot of things fall. So what they are doing, they are discounting that side, and they are injecting liquidity from the system there, because these people cannot close as much. Because see, the premise is you're selling somebody a 30-year policy, doing that over a webinar, it will be reducing, because people have an urgency. Health insurance, people have an urgency, they will buy. A retirement plan, they don't have an urgency to buy in this time. So in this period, they are going after that segment. Another segment is brands and influencers. So brands are going after influencers to do marketing on Instagram, on Facebook, on TikTok, solving the collections problem for these people, because there are not much solutions for these influencers to manage their payments, which are going to come from different brands. Some would be direct promotions, some would be indirect promotions, and managing that cash flows and discounting those cash flows, because the brand would say, I will pay you X money every week. So P&G will not default, a Unilever will not default on this as long as the person is there. So which is why that's the real kind of examples I see where people are solving real pain points by using the traditional ideas. I mean, invoice discounting, cash discounting is not a new innovation, but implementing, and this is technically receivable financing also. Yeah. But nobody sees these people as a real receivables people. So extracting the payouts and dispersals and using them as a quasi-receivable, combining with invoice financing concepts, they've unlocked such a huge stream. And insurance companies are saying, we will give you funding. Because the insurance company wants to take care of its agents, but because of the regulatory policies, they can't give money upfront early. Too complex. So they are like, we do investments, we will invest our money in one of these lending companies to expedite these receivables downstream. So that's where you get the whole engine moving.
Very interesting. Very interesting. So, I think quite a few ideas that people can take from here. Yeah, sure.
There was another example where employees who had to pay for their stock options, and because you have to pay every quarter. So there are companies who are coming in from a perspective that they will fund your buying of stock options and paying for the tax. And then they will take that and they will realize it. And specifically for listed entities, I'm not talking early stage startups, listed entities, because then you can unlock those values out in the market. So because right now there is a cash flow crunch, so the people who are coming in that I will fund your stock option buying plan, and we will split whatever is the money you generate out of this 50-50, zero cost of credit for you.
Got it.
So that's liquidity solutions which I see in the market now.
So Varun, we're not indebted otherwise, but just anything that you've seen wherein fintechs have come in and tried to fuel liquidity in supply chains. Okay, any innovation that you've seen there?
See, fintechs have tried to do that, but they've done it more from the distributor side. Because, for example, the distributors in physical stores are stuck with the inventory. So what fintechs are doing is they're saying, we will help you set up an online store, online marketing with this chain to move your stuff. Because otherwise what is happening is these people are stuck with inventory. So most of the supply chain solutions have been on the last mile and 1 mile before the last to help clear the inventory out. Because these people need hand-holding to understand how to accept payments digitally, how to contact their customers. So it's like a crash course for them to do direct to consumer. So fintechs who are enabling the D2C side of the things, even if the brand is not doing, the distributors are forcibly going ahead and doing it. And that applies even to restaurants, even to like apparel because of weather season. Because people who are planning to sell the summer stuff, by the time all of this over, you're gone. It's winter, it's monsoon already. So your half-sleeve shirts are worth nothing. And you have to hold this inventory for 1 year if you can't get rid of that inventory now. So a D2C innovation on supply chain is where I am seeing, not at the back end, because at the back end is more logistics issue. You can't move the products beyond a point. That's something which fintechs cannot solve on their own.
Got it. Very interesting. And we did hear about some of the banks that you spoke about, Oak North and stuff, who've again gone in a very innovative way in order to enable cash that we've already spoken in the first one. So very interesting stuff.
Right.
Cool. Thanks so much, Varun. With that, I'll quickly switch over to Mukund. Mukund, the area that we want to hear from you, okay, would be a lot of folks and businesses have heard about credit insurance. Earlier, they used to hear it, but they would not really go for it. Okay. Now, of course, the scenario is different. Would love to hear two pieces from information from you. One is how have few of your customers who are non-MNC but Indian focused, okay, how have they really handled their have benefit from this insurance right now? And second is, if companies at this time want to go for insurance, credit insurance, what are some of the things that they should keep in mind before they really go for it?
So thank you, Aditya. I believe I'm audible. Yes.
Yes.
So Beta, I already said earlier, in terms of a company needs to protect its balance sheet. And as said earlier, people only go for mandatory insurances, which are actually forced upon them by various institutions and all those stuff. People never go for insurance as a subject. It's not being so popular, particularly. Credit insurance is something which has to be taken all time throughout the business, not only because of COVID situation. What exactly is insurance? Insurance is a probability if something wrong happens, I am being protected, particularly. So it can be taken for example, any period of time. Nobody knew about COVID situation. Nobody knew about the US-China, the way the trade wars were completely going on, particularly. No, nobody knew about the kind of, when Amazon entered into the US market with online complete, sales and all those stuff, it'll definitely lead to the downfall of a lot of large retail chains, basically, which was being very much prominent over that space. So the entire, I like to say one thing, business is changing with every movement, so within 6 months, 1 year down the line, things are changing so fast. With the new age technologies, disruption is happening at any point of time in any businesses. The whole idea is that you should always keep yourself protected. I think credit insurance helps a lot, basically. So it protects you. In the past years, whosoever basically has taken credit insurance, I can take the examples in the recent past, what has happened? We have seen some around 19 odd bankruptcies in US itself in the last month. Now, with the likes of JCPenney, the big names particularly, many more are particularly been there. So whosoever client has actually got bankrupt, that's a clear-cut case. Anybody who has been supplying to a JCPenney or somebody like those, with the likes of those companies, especially in those markets, he can straight away come and claim out that money. He'll be paid out around 85 to 90% of its invoice values, which is significant. At least he has not lost everything particularly. The same happens with India as well. Though we don't have as such full-fledged bankruptcy, it takes a hell lot of time. But even in credit insurance, three things are being covered: insolvency, protracted default, and political risk. So we are also seeing a lot of political risk arising across the geographies, with the way things are happening up. So what is exactly political risk is nothing. When a particular government in which you have supplied takes some actions which inhibits the buyer to fulfill or honor the contract. That's what credit insurance will come into picture. The third is protracted default, which is willful default. Generally, it happens in such kind of scenarios when we see the entire supply chain has gone for a toss, no business is happening, people are not able to collect monies. So eventually, they don't have an intention to default, but they will have to default. There's no choice about it particularly. So yes, that's the part which is needed. Whosoever has taken credit insurance in the past, and there are a lot of repute names who have already taken it, these kind of policies, and they have definitely got benefited. Going forward again, it's very much open, but yes, since we have seen the COVID situation happening up, so the insurer market per se, the insurance company have become more restrictive. They will not be as open to, because the action has already happened. You take an insurance before the action has taken. Now this action is already known to everybody, so nobody is going to come and cover that risk. So very select sectors are currently being, in terms of being taken for coverage by the insurance company. And sectors which have been severely impacted at this point of time, yes, unfortunately, you don't have a cover. Who has taken this earlier will definitely get the benefit.
Got it. And I know one thing that you had shared with me earlier on as well is that while the insurance companies may be slightly more or cautious in giving new cover, okay, but this is something that you will see is something that people should not see for the COVID perspective, but they should see it from an ongoing perspective.
Yeah, there should be an ongoing perspective, because nobody thought what can come and hit you. Had you been taking it earlier, eventually you would have at least got benefited. The cost of producing the goods or the services would have been at least taken care of you. Okay, I'm not talking about the profits part, but at least a major part of your cost would have been got protected. You would have protected your balance sheet. I think many of the companies will go down if they don't get the monies right now.
Got it. So it's basically very interesting is that we always used to see credit insurance as an expense item, literally. Okay, but right now it's more like it's something that people should look at as a way to not only protect themselves but also think about. And I think one thing that you had shared with me earlier on is that if you have credit insurance, people can actually also help you get cheaper invoice discounting. Okay, some of the innovations that Varun spoke about, if you already have insurance, actually the cost of that financing or discount would have been even cheaper because that you've taken away that much of risk.
Basically, I just wanted to add one point. Look, a lot of banks, financial institutions really look at it. So some particular client has taken a credit insurance. They feel more confident, in providing liquidity or a loan support to those companies as well. And I believe India is on a verge of change. Recently, IRDS formed the working committee to look at, where even banks can be insured, particularly who are providing this factoring and discounting. So it will be a very big game changer because it can add a lot of liquidity in the market. So tomorrow, for example, if anybody who is coming for an insurance, he also knows that he can get to a bank. The bank will support it. He'll get the monies right on day one itself. I think it will be very helpful in providing that additional amount of liquidity as
well. Got it. Thanks, Mukund. So I think we got a perspective of the fintechs and we've got a perspective from credit insurance. Okay, now we want to go to the practitioners. But before I do that, I do want to share the results of the polls that we had with the audience. We had 6 questions. I'll do the first 3 right now. The first question that people were asked is, by how much do you think DSOs will increase till the situation becomes normal? Majority of the people have said by 50%. That's a big number. The second one is, when do you think this business uncertainty will really end? Most of the people have actually said between 2 to 4 quarters. That means they are almost writing the whole 2020 off. And the third one that we had was, do you think that the situation has led to a fundamental change you interact with your customers, vendors? Okay, and almost everyone has said yes. So we see an increase in DSO. We're seeing uncertainty for at least next 2 quarters. Is going to look at a way in which they the customers, vendors in a different way. With that, I want to switch over to Vijay. Vijay, you did mention about how you're already seeing different parts of the global supply chain or global market that you supply into reacting in a very different way. My question is that what are some of the steps that you've taken across these different markets in order to, one, prioritize how to think about your collection from these guys, and also think about technology or any other financial services that you utilize in order to make sure that at any given point of time, capillary does not, really feel the heat and can manage these tough times?
Yeah. I think from a first things perspective, Aditya, we have gone back to the oldest way of communicating with the customer. 2 principles that we are currently keeping in this time is, 1, communicate, 2, empathize. It's not just we who are in crisis. It's not just the customer who's in crisis, but the rest of the world, right? The entire world is in crisis at the moment. So it's very important to understand that the customer is not in this crisis because of some mistakes that they have done. They are not paying you because their business is down, but it's just because it's beyond all our hands. So very, very important to empathize it, to communicate. We have gone ahead and put all our resources currently to communicate to customers, from our CEO to customer success managers, to the finance team, to even the sales team who generally reach out to newer customers. They are now speaking only to the existing set of customers. Let them know that you are there, you understand the issues, and that will, once they're back on a much more stable platform, they will come back and help you out and prioritize payments for you. I think that's the key thing. And when it comes to empathize, also what we are helping customers and telling is that, hey, you have 100 pending. Let me know a due date by when you can give me. Right?
Promise to pay dates.
Give me a staggered payment. Understand, no point in insisting that the entire 100 should come in over here.
Yeah.
Give me a staggered payment. Give me a due date. Give me some forecast so that we can plan our dates. So that kind of helps the customer know that it's not just their problem. This is we are equally in this. I think that's the key thing. We've also gone ahead and extended discounts to a lot of customers where they wanted it, because a big chunk of our customer base is retailers. So we have gone ahead and and they're shut down, right? So we have gone ahead and done that more proactively with our customers, which they've appreciated. So that's the key thing. But of course, this I think from a usage of technology and perspective, this cannot forever be there. I mean, it's not a scalable model. Couple of months we'll be able to do this on a regular basis. Post that, we do have to leverage the technology that is there. And unfortunately, the space that we are in, B2B segment, that's probably, the last technological innovation happened when dinosaurs left the world. There's hardly any technological innovations that have happened. People still, like what Diksha was saying, people still rely on manual invoices, hard signature seals, etc. So I think a lot of basic issues that need to be fixed, we still don't see, and that creates a lot of room for tech companies to come in. We are seeing a lot of new age companies like TiE-numberz, right, or File, or ClearTax, who are solving some pain, small areas, end to end. I think that really helps. Currently, that's the technology that we, small solutions that we use and try and get around the problems. But there's a tremendous space out over there to solve for B2B, receivables and collections related issues. So, yeah.
Got it. Yeah. So very interesting, Vijay. I know you did speak about that you're also looking interested in seeing what happens in the insurance side of things for you guys, and then hopefully at Numbers we keep adding value to you guys. Okay, so we're so very happy that how you guys have taken this up and are one of the few guys who even on the B2. So actually your situation is even more difficult because you guys deal with B2 large deals. And their challenge is even more sort of tricky. So I think that is where companies like us are trying to partner with people like Diksha, okay, and trying to get in people from Varun's ecosystem to think about what we can do over there. But definitely it's a space that's really up for disruption.
I'm hoping that things like the account aggregator network, once it comes up.
Yeah.
The whole e-invoicing system that is happening with GST. These will be game changers. If these can come in quickly, what we need is more standardization. I think what is missing in the B2B segment is standardization. I think hopefully these will help in standardizing things.
Yeah, absolutely. I think the globally this is going to make us make at least life for companies like us much simpler, because a lot of people are now trying to think about adopting this and therefore bringing standardization. So we at least at Numbers are very excited about what's happening right now. So hopefully we'll be able to bring a bit more changes on that front. So thanks, Vijay. For that, quickly over to you, Rajiv. From as I said, from a perspective of the B2B2C, which is the dealers and distributors network. Okay, and as you right now, as I said, you've dealt with them before. Now you're also dealing with some of the clients. Something that you want to share with us as to how are large companies helping unclog the distributor network for themselves?
So I would say the receivables has been an issue for any distribution-led company well before the law. It's been running on for decades. So my first point to any organization is the way you go back to a distributor and you measure his performance, whether he has given you the right volumes and the money, the distributor also does a measurement. He may not put it across the table, but he deals with 4 or 5 brands. And he also sees how responsive you are to his money. So an average distributor who has 4 or 5 brands, each company having about 400 to 500 SKUs, monthly schemes, quarterly schemes, annual quotas, loyalty schemes, you have foreign trip schemes. Now, you have to recognize that a distributor is billing to a retailer, getting his money back. It is finally how the money moves, which makes his business profitable there. Right. So if the company is not responsive towards this point and understanding that this is a distributor, you can ask a distributor on 30th of the month, have you done my target or not? Have you created or enabled a platform wherein the money movement between you and the distributor is taken care of? Can it be taken care of real time, anytime? And I think for a long time, I have personally struggled on this. Right from being a sales manager to being the managing director of a large organization, my CFOs have struggled. And I think if there is a platform which can address the issue, where a distributor can address his issues and get at least most of them covered up, will address a huge pain point there. Now, they have issues, but I think COVID could be another acceleration point there, where the problem becomes bigger and the requirement becomes sharper. So I do see a lot more acceleration in the use of technology to address how our distributors' payment flows and how his issues get resolved there.
Got it. We actually have, from the audience that we saw during registration, we actually have quite a few companies, large companies of 100 crores plus who are in this audience, okay, who are in the B2B space. From 2 of them, we got one, similar question was, and you mentioned about it, is there are quite a few issues around, this whole thing around the incentives, volume incentives, foreign trip incentives, all of these, okay? And both the payments and a lot of payments get stuck because of this. So any other innovation that you've seen in terms of either from the payments or the banking or the financing channels, okay, or any channel or any innovation from the SAPs of the world or on the space?
No, so I would say even the financing channels that have happened, they've helped a distributor to pay. but they have not resolved queries. The company's liquidity is preserved. But you have to recognize when I speak about the incentives that the distributor gets, roughly between 4 to 10 to 12% there. Now, in his regular business, if he's earning a distributor margin of 3 or 4 or 5%, that's his cost of running the business. He's still not taking home money here. And when you address the schemes that he gets, whether they are quarterly or annual, the channel financing will ensure the distributor pays the organization. But addressal of the resolution is something which is important. So which is where I feel platforms like TiE-numberz, or there could be more, if you have a platform which can address first the problem gets highlighted, and then if it can get addressed. This is where the distributor starts becoming profitable.
And the second common question that we got during this one was, the payments between the distributor and the principal. Okay, a lot of it was also right now largely check based or even sometimes cash based. Okay, and during this the whole thing around pandemic, okay, wherein I think the issue was twofold. One was that of course there's a cash flow issue, and other was now the sales guy is not going to knocking at the distributor's door asking, please give me the check. That is something that is, and I think Disha also mentioned about that. So is that something that you've seen about during our conversation with your principal?
Yeah, so with some of our large customers, there's discussion around it. There's in fact a very large B2B customer of mine. He owns a market 70%, 1,000 plus crore company. But the sales guys get a thrill when they go and collect a check and they log in the order, which was very surprising. And it's a tech-based company which is not using tech platforms for money collection. They have about 5,000 B2B. So you name the Infosys, everybody, all of them are the customers. But the sales guy gets a thrill. He brings in the order, he logs it, and he says, okay, I picked up the order, now you give it me a credit there. So these guys are the early adopters, but even a distribution-led company is now planning to move into more tech-enabled payments.
Got it. So with that, I think thanks so much, Rajiv. We are at almost 12. So we have 10 minutes for the customers' questions. Okay. So the first one, panelists, quickly, can you all hear me properly? Disha, Varun, Mukund. Okay, great. So Disha, I'm going to ask you the first question. Okay. So one thing that I'm hearing. Your question that's coming is from my phone. Sorry, excuse me for that. What are banks like Citibank doing in terms of digital payments in the B2 scenario or B2 B2C scenario? Any specific initiatives that you've done in India which they can utilize?
I think what I'd really like to bring out is that for Citi, we have almost all of our customers giving digital payments. The fact that when we got over to work from home, we're able to process all of these, although our tech and ops teams are doing work from home for the last 2 months. So what really matters in this point of time, and we had also done, like Aditya had earlier mentioned, a webinar which was attended by about 400 clients across India and the globe. And the number one priority that those clients shared with us was to be able to have a secure payment option at this point in time. Because what is happening is that the earlier method of going to a branch or giving an instruction where people were all in their environments which were sanitized is no longer available, and frauds and hacking, etc., are a reality in the current environment. So as a bank, therefore, what we're practicing a lot is in terms of how do we do callbacks to authorized signatories. It's a practice for many years. It's an added control. How do we have a significant amount of checks and balances if any instruction comes over email? And interestingly, about 99.9% of our transactions actually come through our online platforms. Where we have biometric authentication, we have mobile apps which can be accessed on any of the mobile instruments, and then of course web-based and desktop-based URLs. So I would suggest that anyone who's looking to have a digital payment option, you should definitely try and see in terms of what are the controls that are there at the back end. Avoid emails as far as possible. And use the bank's online either app or desktop-based channel.
Quickly, there's another question we have, which I'm going to give it to you, Deeksha, again, is so So they're saying that while cash is king, okay, and we need to preserve cash, okay. What would your suggestions be in terms of parking surpluses in whether it's on FDs or any other instrument that you speak about? Number one, and number two, how would you recommend that? Should I keep FD, okay, and at the same time utilize my credit lines and overdraft, overdraft while trying to maintain my liquidity? So it has two questions. So I'll again repeat. One is, I have FDs. Should I continue using my credit and overdrafts, okay, to fund my working capital? And second is FDs the best way to keep my extra cash? So two questions.
I think these are very good questions. And if you see what is playing out in the market right now, and I'd like to quote Bill Gates here in one of his interviews with The Economist. He has gone on to say that when historians will write about the pandemic of COVID-19, what has happened thus far will only be 1/3 of the story, and 2/3 of the story is yet to play out. And the context of this is economic. So when you see in terms of what's also happening in the India market, whether it's on the NBFC side, it's on some of the bank side, just in terms of what you could expect on some of the bankruptcies if they were to start to pan out. One trend is extremely clear, which is flight to safety. And when you look at flight to safety, it's important that your capital is protected. So wherever you are parking funds, and we have seen a few of the debt mutual funds actually stopping redemption as well. It's important that companies not chase yield at this time, but just park your funds in the most secure option, which in fact is FDs. And there also you should be looking at what are the counterparty risk ratings that various instruments where you're keeping your money, and evaluate them in great detail. So that's a number one advice, that yes, park it in a safe place. That's most important. The second one, which is in terms of how should you look at your working capital. I can tell you what clients are doing across the globe, and clients are doing even if they have very large cash reserves. They are drawing down on their credit lines. So a lot of clients are drawing down on credit lines and parking that money in FDs or in very secure instruments. The reason being that as the economic fallout of this starts to play out across the globe and in India, there's a lot of uncertainty, and what is for sure is what credit line you are enjoying with your bank or at this time service provider right now. So it will be an optimal decision to actually draw down to whatever level you're comfortable and have some more cash on your balance sheet. That's what we're seeing companies do.
Good. So my takeaway is that FD is the safest, and second is the more you can draw down on your credit lines, do that and preserve your own cash. So that's what the advice is.
Yeah. And Aditya, if I could just add to that, like what Diksha said, this is a time not to cancel off or net off your credit lines. Keep it as much as possible. The one relationship that you don't want to go sour at this time is banks. They're your best friends at this time. Keep it on, keep your credit lines. And this will last much longer.
Absolutely. I think, everyone's saying bank is my best friend. And they all asking, please also give me a link if you haven't already. But anyway, so the next question that I is actually for Varun. Varun, the question is, fintech solutions like mobile wallets and UPI are significantly increasing during this time. Okay. Question really is, what are the risks are you seeing in them, especially around mobile wallets and other places wherein you have money one way or the other?
See, I don't see that the wallet will shut down, because the wallet keeps money with a nodal account with a bank. So it's not that as much of a risk. It's a lot of concern is around the black and the white, because a lot of this was cash collection, so there was not enough tax payment on those. And now suddenly a lot of this is visible. So how do you handle that specifically for cash intensive businesses? The good part of it, now you can show a lot more income to the bank so you can get loan. But the challenge is to justify, and the premise is you are still buying cash. So the people below you are not moved to digital while your invoice is changed. So how do you handle along this line? And your tax liability changes, because suddenly you are selling so much, and then the tax guy will say, okay, what's your input GST? What's your output GST? So it's changed. And that's something like that happened post-demo as well. Post-demo also, people had to justify where did this money come from. So that's something that we need to figure out. And the other premise also is a lot of consumers are now going direct to D2C, because they are not happy that Amazon and Flipkart are taking so much cut. Restaurants are not happy that Swiggy and Zomato are taking so much cut. So which is why they are looking at, can we partner with these wallets to be directly acquired? So that's when the likes of BharatPe will come in and say, we will let you go have a direct access to the consumer so that you don't have to pay. And because the delta is huge. Yes. And because right now the consumer is desperate, and if the brand manages to get that connectivity once, then you are saving 15% every order. That's huge.
We have two last questions. I'm running out of time. My quick last question is, to Rajiv, I'll post it to you. Okay. It is, the biggest challenge is in delays in collections. Okay. And at the same time, we are having to then delay our, vendor payments. Okay. If that is true, I think this is from, I think the size of the business is less than 100 crores. Okay, I think you have lost him. Okay, no, Rajiv.
Yeah, I'm there.
So Rajiv, anything that you're seeing from your mid-market customers on how are they managing their delayed collections as well as vendor payouts? Anything that you're seeing from there?
Right now, I think most of them have frozen operations. They're getting back into a restart, and they're trying to figure out how to get it. They're looking at areas which they can serve. So I have a customer who runs a pan-India operation. He's got a service network and a sales network. He doesn't know which areas he can enter and which areas he can't enter. There are red areas, there are green areas. So he has to figure out which areas he can serve. He can service his customers. His payments from distributors have right now frozen up. And as a precautionary measure, he stopped his payments to his suppliers. So not really a great situation to be in. You need to move out of it. You need to pay your suppliers. You need to get money from your distributors moving. You need to get the markets opened up here. So I think as the markets get opened up, the flow will start. But the entire ecosystem will have to understand it's no longer the sales guy getting in the check from the distributor or your supplier coming to you. So their payments to the suppliers have been more digital. But their payments from the distributors have been more manual. And that's the first stage that they need to do in terms of digitize the payments, what they get from the distributors. I think it will take its own course of time. I don't see people moving into a digital world overnight, but in the next 2 or 3 months, the system will have to start adopting more digitization, and people will have to start making payments to the suppliers and start getting money from their customers.
So I think that my one key takeaway from here is the following: is that if you divide your distributors into two segments, one is people who have a cash flow or existential issue. Of course, that you can't do much about. But people who can pay you but are not being able to pay you because of the pandemic, you're not being able to meet or not being able to hand over to something. At least that percentage you should be able to unlock by using digital payment. Okay?
Absolutely.
And therefore, the step that the business should follow is two-step process. Identify your customers in two segments: those who have a systematic problem, okay, which you can't do anything about, and those where you can manage the problem and make sure that you have the best tools to solve that. That's where you're going to do it.
Absolutely.
Okay. And the last question, Mukul, it's for you on the insurance side. It's very interesting. I don't know how to think about this question properly, but I'll still try it. So can insurance companies use force majeure clause to avoid claim on account of defaults on receivable payments? So I'll try to again repeat.
I got your question. I got your question, I think. Fine.
Okay.
There's been, a couple of instances what we've been hearing of the force majeure clause, especially in the property policy. But as such, in credit insurance policies, till date, there has been no force majeure clause in India. So I'm talking about the product which has been filed with the regulator in India. Till date, the policies which were existing, they don't have this clause. Definitely, what I feel now, particularly with this situation which has come up, the COVID situation, insurance might introduce this clause going forward. So whosoever has taken in the past has got benefited out of it. But in future, yes, I believe this is one thing which insurance companies are also discussing. If such kind of an event happens, can it do it? But till date, yes, nothing like that.
Okay. So actually, Mukund, we have. Hello, I'm back. Can you guys hear me now? Yeah. So this is a fallout of COVID. All our bandwidth is choked. But anyway, so Mukund, I actually have a few more questions on insurance, but I did not want it, to be completely consumed. Okay. So we will send you these questions offline. You can ask. And even Deeksha, we have a few more questions around loans and collaterals and quite a few. Again, we thought that they can become very technical, so we'll again send them to you offline, and you could reply to them separately, and then we can reach out to those audiences from there. We are slightly over time. Sorry, it's 1:03 right now. Panelists, thank you so much for finding time. Really enjoyed the session. I hope the audience did. We've wide variety of questions, pieces. Okay. So hopefully, people can, have a broad key takeaway. And as a follow-up, what we will do is we will create some smaller sections, okay, wherein we will either get deeper into insurance or deeper into some of the pieces around, banking side. So please, stay plugged in, audience. We will get back to you with more details. With that, thank you so much. Thank you, Deeksha. Thank you, Arun. Thank you, Mukund. Thank you, Vijay. Thank you, Rajiv. Have a great weekend, and we look forward to catching up with you again. And thanks to our audience. It was a pleasure, bringing this to you guys. Have a nice day and all the best.
Thank you. Have a nice weekend.
Thank you.